In last week's video and the one before that, I shared with you the best property to invest in. Well, my favorite, the duplex, as well as how to calculate a property's cap rate and cash on cash return. In this video, I'm going to bring it all together and show you the one calculation you need to know when analyzing real estate, return on investment. So if you're not sure how to determine a property's return on investment, watch until the end of this video and you will get the exact calculation so you too can go and instantly analyze a property's return on investment. Hey, it's Tyler, 2015 Crew Magazine Investor of the Year and your real estate investing educator. I'm so glad you turned to my channel. I talk about how to invest in real estate. So subscribe to my channel and hit the bell to be notified when I post a new video each week. So let's get started. How do you calculate a property's return on investment? Well, in my one video, What is Good Cap Rate? And if you haven't watched it yet, the link is in the description below. I talk about what is a cap rate, a capitalization rate, and how to calculate it when analyzing a property to invest in. However, investing in real estate is a long-term game of holding on to rental properties, allowing you to build wealth and build equity. And it's that building equity is what you're looking to figure out when you're looking to determine a property's return on investment. So, how do you measure a property's equity? Well, it's the amount of the mortgage that was paid down over a period of time and the property's increase in value. I know, you're probably wondering, well, how do you find that out then? Don't worry, because I'm going to show you right now. So let's use the same property I used as an example in my last video, which again, you can watch by clicking in the description below, where the investor is looking to purchase one of my properties that I own, my side-by-side duplex, and here it is again, for $250,000, which is about market value right now at the end of 2018. So the investor already knows the cash on cash return the property will generate, but he doesn't know the total return on investment, which factors in the amount of the mortgage that is being paid down each month, each year by the tenant until it is paid off, and depreciation, if any. So let's figure it out then. Just like calculating the cash on cash return, where we took the net operating income less the mortgage, which we determined in my one video, what is a good cap rate. The NOI is $273. Again, this was calculated by taking the gross rental income of $2,000 minus the property's expenses of $700, which gives us our NOI minus the mortgage amount of $1,026, which you can see the full breakdown here. And just a little side note, these are the property's actual numbers. So this is the return that you can get when investing in real estate. When calculating the total return on investment, though, we just need to go a little further and add the amount of the mortgage that has been paid down over the year to this calculation, our net operating income less the mortgage. So that's where it gets a little tricky when determining your ROI, as we need to figure out this month, this mortgage pay down. One way to do this is to go online and find a mortgage calculator that will calculate that for you. So let's do that right now. Let's go to Google and we're just going to type in mortgage calculator. And you can choose any of them, as they all calculate the amount that the mortgage will be being paid down each year. So let's use this one. We then go and input the amount of the mortgage, which was $200,000. So remember, this was the investor. Investors put 20% down, 50 grand. So we subtract that from the purchase price. We'll then leave the amortization. We'll just leave it at 25 years, but we're going to change the interest rate to 3.77%, and we're going to hit calculate. And it's going to give us the results, and we're going to go over here and click chart. And here's where it breaks down what is being paid. And as you can see, a portion of your mortgage payment goes to paying the interest, the cost to borrow from the bank, which was 3.77%. And a portion goes to the principal, the $200,000 mortgage, which was the amount that the investor was borrowing. Now that we know that amount of the principal that is being paid down each year, which was $4,929.50, we can go back to our calculation and add this amount to the net operating income less the mortgage. And as you can see here, once you add this in and divide by the capital that was invested, 20% of 250 grand, 50,000, your return on investment is 16.42%. So by including the mortgage paid down, you are now comparing apples to apples when looking to other investments, such as that mutual fund your financial advisor is telling you to invest in, or a stock your buddy is trying to get you to invest in. I'll bet they're getting these kinds of returns though. In fact, comment below if you are or know of someone investing in a mutual fund or stock or crypto that is getting these types of returns. But wait, investing in real estate gets even better because there is one more item you still need to consider when analyzing a property's total return on investment. And it's the cherry on top when you own real estate, the property's appreciation. So if we take the exact same example and factor in just even a 2% increase in the property's price over the past year, as you can see here, your return on investment increases to 26.42%. So 10% increase now, just because a little appreciation. And to calculate that appreciation, all we did was take the purchase price, the 250 grand, multiply it by 2%, which just gives us 5,000, and then you add this to your net operating income less the mortgage plus the total mortgage that was paid down, and you divide by the capital invested, which here's a breakdown just to make it a little more sense of it because it is confusing. But this is how you calculate the return on investment with appreciation. Once you do this, now this is your true return on investment. This is what you're going to do when you're looking to invest your hard-earned money and compare to other investments. And this is why I love real estate. I mean, really, a 26% ROI, return on your hard-earned money. Now, sure, you don't see this return until you sell the property, but the same can be said for any investment. All right, so now you know how to compare apples to apples investing in real estate to other investments. But how can you do this calculation much quicker than how I showed you here? Because it's very time intensive, right? Well, I've created a buy and hold property analyzer spreadsheet, which you can download for free here, which instantly calculates a property's return on investment, as well as the other financial calculations you need to pay attention to, such as the cash on cash return, the property's payback period, and your net operating income. And you can grab that below in the description to this video. Also, if you want to join a community of real estate investors just like you, I have my secret society, Real Estate Investing on Autopilot, which you can join by clicking on the link below, where I share up-to-date real estate investing tactics and strategies and tips all the time. And if you like this video, let me know by liking it. And also subscribe to my YouTube channel and share this video with a friend. Teach others how to invest in real estate. And lastly, comment below with helpful if this video helped you in calculating a property's return on investment. And be sure to check out some of my recent videos here to learn more about how to invest in real estate. Again, thank you for your time, and we're going to see you at the next one.